All right, ready to dive in. We're tackling Warren Buffett's latest letter to Berkshire Hathaway shareholders.
The 2024 one?
It's always an event, right? More than just numbers.
People hang on his every word, for sure.
And for good reason. This year is chock full of insights, surprising ones even for seasoned Buffett watchers. We're talking record tax payments, some intriguing investment moves, and even a CEO taking a $100,000 salary.
You're not kidding. That Pete Legal story is classic Buffett.
Let's jump right into that. Buffett buys this RV company, Forest River, and he tells the owner, Pete Legal, name your salary. Like, who does that?
It shows a lot about Buffett's style. Huge confidence in Legal, not focused on the short-term nickel and diming.
Exactly. But then Legal says, well, I don't want to make more than my boss, meaning Buffett.
What a humble guy. You don't see that every day at that level.
Right. So he takes a $100,000 salary, which is unusual to say the least. But wait, there's more.
Oh yeah, the bonus structure is key here.
He gets 10% on any earnings above what Forest River was already making. Pretty savvy, huh?
Aligns incentives perfectly. He wins if the company wins.
And they won big. Legal ran the place for 19 years, outperforming like crazy. It makes you wonder, how many companies would benefit from that model? Tying CEO rewards directly to shareholder value.
Food for thought, no doubt. Long-term thinking over short-term gains, more CEOs should embrace that.
Now, Buffett doesn't shy away from the not-so-great stuff either. He straight up admits mistakes in this letter.
Oh yeah, he even quotes himself from way back, talking about messed up capital allocation.
That transparency is what sets him apart. So many companies, they just sweep the bad stuff under the rug.
Right. It's all happy talk until it all blows up.
Speaking of avoiding tough decisions, Buffett includes this quote from Charlie Munger about thumb-sucking.
Haha, the art of procrastination, we've all been there.
Oh, for sure. But when you're dealing with billions, a little procrastination can have major consequences.
You can say that again. It highlights why Buffett's so big on patience. Berkshire's size, it demands a long-term view.
It's like steering a giant ship. It takes time to change course.
Exactly. Quick decisions, they're not always the best, especially at that scale.
And then, just casually dropped in there, Buffett mentions he never looks at where potential CEOs went to school.
What? No Harvard or Wharton pedigree required.
He's always said some people are just naturally gifted. He even mentions Bill Gates dropping out of Harvard.
It's like he's saying, forget the fancy diplomas, show me the results.
Right. And he tells this great story about Ben Rosner, a retailing genius who only finished 6th grade.
Talk about proving the point. Talent doesn't come with a degree.
It makes you rethink the whole education equals success equation, doesn't it?
Absolutely. Diverse paths to success. That's something we should all keep in mind.
Now, about Berkshire's performance in 2024. It was a good year overall, even with 53% of their businesses seeing earnings decline.
Yeah, they had some headwinds for sure.
But increased investment income, particularly from Treasury bills, helped offset that. And Geico, under Todd Combs, is showing improvement.
That's great to hear. Geico's been a bit of a sore spot in recent years.
And speaking of Geico, it reminded me of something else in the letter. Climate change and its impact on insurance.
Ah, yes.
And that's got to worry any insurance company, right?
Right.
But Buffett, he emphasizes that Berkshire is prepared.
Both financially and psychologically. They've got the experience and the resources to handle it.
And then we get to the jaw-dropping tax fact. Berkshire paid more corporate income tax than any company in U.S. history.
$26.8 billion. It's almost hard to comprehend.
Yeah, he compares it to sending $1 million check to the Treasury every 20 minutes all year long.
That puts it in perspective. All that from 60 years of reinvestment compounding at work.
So we know they're raking it in, but where's all that money invested?
Well, they've got this unique approach. They control a bunch of subsidiaries, 189 to be exact.
Wow, that's a lot to manage.
And they own smaller stakes in some big-name public companies, too. Apple, American Express, Coca-Cola, you name it.
It's a two-pronged approach.
Yeah.
Control some companies outright, dip their toes in others.
Gives them flexibility. Deploy capital where it makes the most sense.
But each approach comes with its own challenges, right?
For sure. With wholly owned companies, if things go bad, it's harder to get out.
And with those smaller stakes, you're at the mercy of management decisions.
But that's where Buffett's long-term view really shines. They're not in it for quick flips.
They're building a portfolio designed to last. Speaking of the long term, that huge cash position they're sitting on, it might raise some eyebrows.
Right. People might wonder, is Buffett getting cold feet?
But he makes it clear the vast majority of their money is still in equities. That's not changing.
He still believes good businesses beat cash, especially when things are uncertain.
So he's not abandoning ship, still betting on the American economy.
Yeah, he has this deep faith in American ingenuity, the ability to adapt and overcome.
And it's not just about the economy. He expresses genuine gratitude for the U.S. system.
Even throws in a thank you to Uncle Sam, though with a little reminder about responsible spending, keeping the currency stable.
Classic Buffett.
Hmm.
Optimistic, but not afraid to offer a nudge in the right direction.
Now we've only scratched the surface here. Berkshire's core is insurance, and that's a whole other fascinating beast.
Get ready for a crash course in the world of float and the art of underwriting. All right, so we talked about that mountain of cash Berkshire has, but Buffett's still a big believer in good businesses, right? Especially when things are a bit shaky in the economy. But there's this other side to the coin where Berkshire really stands out, and that's insurance.
Insurance, yeah, specifically what they call PC, property and casualty. It's a different animal.
I'll admit it's always been a bit of a mystery to me. You pay them up front, but they might not pay out for years, decades even. How does that even work?
That, my friend, is the magic of float. That's the money insurers are sitting on between when they get your premiums and when claims actually get paid out. Berkshire, under Buffett, they've become masters of this float game.
So it's not just sitting there doing nothing.
Oh, no, they invest it. And that's where things get really interesting. Think of it this way. They're using other people's money to make even more money while also, hopefully, making a profit on the policies themselves. Pretty sweet deal if you can manage it right.
Okay, starting to see why Buffett loves this insurance thing so much. But he's not blind to the risks either, right? He talks about those too.
He does. It's not all sunshine and roses. Insurers can look profitable for a long time, even decades, but be marching towards a disaster they don't even see coming.
That's kind of scary. How do they avoid falling into that trap?
Discipline, my friend. Disciplined underwriting.
Berkshire, they're really good at assessing risk, figuring out what a premium should be to actually make money. They don't chase every dollar. They're focused on the long game.
And they've got the legend himself, Ajit Jain, running the show over there. Ajit Jain, he's the maestro of insurance. Incredible track record. Spots the good opportunities, carefully manages the risks. The best in the business, some would say.
But even with the best, insurance is always going to be tied to risk, right? Especially now with climate change and all its effects.
Oh, absolutely. These natural disasters, hurricanes, wildfires, they're getting worse. Billions of dollars in damage. Easy.
And the more stuff we have, cars, houses, businesses, the more we need to insure it all. It's a cycle.
Exactly. More to lose, more to insure. Makes sense, but it's a tough business to be in right now.
Buffett even says writing these long-term policies for hurricane or wildfire damage, it's madness in this day and age.
Makes you think. Trying to predict that stuff long term, it's like trying to predict the lottery. Impossible.
So Berkshire sticks to the shorter term stuff. They can adjust as things change, not locked in when the world's going crazy.
They've got the financial muscle to be choosy. Don't need to chase every risky bet that comes along.
Playing the long game. Picking their battles. That's smart. Speaking of long-term thinking, what about those investments they've got in Japan? That's a newer thing for Berkshire, isn't it?
It is, yeah. Shows Buffett's not afraid to try new things. The world changes. You gotta adapt.
So fill us in. What's the story with these Japanese investments?
Well, about 6 years back, they started buying up stakes in these Japanese trading companies. 5 of them, ITOCHU, Marubeni, Mitsubishi, Mitsui, and Sumitomo. They're conglomerates, kind of like mini Berkshires themselves.
Ah, so he's sticking with what he knows in a way. But what did he see in them specifically? Why these companies?
Stock prices, for one. They were undervalued, at least at the time. But he's also come to like their management teams, how they allocate capital, and they're very shareholder-friendly.
Shareholder-friendly. What does that even mean in real life?
Dividends, for one. They're not afraid to pay them out and increase them, too. Stock buybacks, keeping those share prices healthy. And they don't go crazy with executive pay either. Pretty refreshing to see, actually.
In this day and age, yeah, that's almost unheard of. Sounds like they're actually trying to reward the owners, not just the CEO's pockets.
Exactly. Aligns with Buffett's whole philosophy, right?
Yeah.
Build value for the long haul, for the people who actually own the company.
And these are long-term plays for Buffett, not quick flips. He even hinted they might do more business together down the line. Who knows what he's got cooking?
Always thinking a few steps ahead, that's Buffett. But there's a wrinkle, of course. The whole currency thing. Yen versus dollars, it can get messy.
Right, that could wipe out any gains if they're not careful. How do they handle that?
They've been borrowing in yen, cleverly done, creating what they call a currency-neutral position. So the exchange rate fluctuates. It doesn't hurt them as much.
Smart move.
Yeah.
Got to protect yourself from those wild currency swings. The market's unpredictable enough as it is.
Exactly. Shows they're paying attention, not just throwing money around blindly. Thinking it through.
All right, so we've covered insurance, we've talked Japan, but there's one more thing we can't skip. The legendary Berkshire Hathaway shareholder meeting. Omaha, baby.
Oh yeah, the Woodstock of capitalism, as they call it. People come from all over the world. It's a pilgrimage for Buffett fans.
Okay, before we move on, gotta ask about Bertie Buffett. Warren's sister, she'll be there again this year, right?
Oh yeah, Bertie and her daughters, they wouldn't miss it. She's become a bit of a star in her own right. People love her. Down to earth, close to her brother. A real connection there.
Last year, Buffett was talking about Bertie's theory, how carrying a cane helps her avoid unwanted attention from men. He even asked people to report back, see if it was working.
Haha, all in good fun, of course. But it shows even amidst all the serious business stuff, Buffett can still have a laugh. Doesn't take himself too seriously.
Reminds you, he's human after all. Brilliant investor, yeah, but still a guy with a sense of humor.
That's what makes him so likable, I think. Down to earth, even with all that success. Doesn't let it go to his head.
All right, I think we've covered a lot of ground here. Insurance, those Japanese investments, even got a peek at what's happening in Omaha.
What more could you ask for?
One thing keeps coming back to me.
What's that?
Buffett's optimism. It's like, even with all the crazy stuff happening in the world, he's still so bullish.
It's kind of his trademark, isn't it? Unwavering belief in America, in human ingenuity, that we can figure things out.
And it's not like he's ignoring the problems.
Yeah.
Right? He acknowledges the flaws, the things we've got to fix. But he still sees that big picture, the long-term potential.
Right, he's not naive. Like when he thanks Uncle Sam, but then reminds him about responsible spending, keeping the currency stable. It's a subtle nudge.
Like saying, hey, let's keep this ship afloat. We're all in this together.
Exactly. A healthy economy, it benefits everyone, not just Berkshire. And that long-term thinking, it's everywhere in what they do.
Which brings us back to that giant pile of cash they're sitting on. Some folks might see that and think, uh-oh, is Buffett getting scared?
But that's not his style at all. He makes it very clear. Good businesses, they'll beat cash in the long run, especially when there's so much uncertainty. He's not hoarding it out of fear. He's waiting for the right moment.
Like a coiled spring, ready to pounce when that perfect opportunity comes along.
That's a great way to put it. And when it does, they'll be ready. Berkshire, they've got the firepower to make big moves, buy those great businesses at the right price.
All right, before we wrap up completely, one last thing I wanted to touch on. Towards the end of the letter, Buffett talks about Berkshire's impact, how they've touched so many parts of the country, from insurance to railroads to energy.
Yeah, and he's not done yet. They're still growing, still evolving, looking for new ways to create value. It's impressive.
I love that part where he compares Berkshire to a living thing. Unlike us humans, old age isn't a death sentence. At 60 years old, it's like they're just getting started.
It's all about adapting, isn't it? Being willing to change, to learn new things. That's how they stay ahead of the game.
So as we close out this deep dive, I'm curious, what were your big takeaways? What really stuck with you from this letter?
For me, it's got to be that optimism, that belief in the American spirit, in building a company that's profitable but also does good in the world.
I agree. That really shines through. And let's not forget that focus on talent, finding the right people, no matter their background, their education. It's inspiring.
Challenges those old ideas about what it takes to be successful. Encourages us to look deeper, see the potential in everyone.
So what's the message for our listeners? What can we learn from Buffett, from his approach to business, to life even?
It's that long-term view, for sure. Patience, discipline, knowing when to adapt, building something that lasts, weathering the storms, never losing sight of your values. It's powerful stuff.
It's about realizing success isn't just about you. It's about making the world a little bit better, leaving your mark.
We really encourage everyone to read the full letter. You can find the link in the show notes. And let us know what you think. What surprised you? What made you think differently? We'd love to hear it.
That's what these deep dives are all about, right? Until next time.